Today is the 20th of May 2021. Hope everyone is doing well. Alright, so for a start, let's have a quick update on what has happened yesterday. So we know that earlier at 2 a.m. We have the FOMC meeting minutes. They have finally took a turn and saying that it might be appropriate at some point in the upcoming meetings to begin discussing a plan for tapering. Right, so they don't have plans for that yet, but it is about time that in upcoming meetings they are going to start discussing a plan for tapering. So that is actually a more hawkish stance that the Fed is taking, and as compared to what they are always talking about in the past. Say that, like right here, 7th of April, they commented on the notable rise in treasury yields. Okay. A rise in treasury yield usually refers to also a rising inflation risk, right? And generally viewed as reflecting the improved economic outlook. So, firming in inflation expectations and expectations for increased treasury debt issuance, blah blah blah. So back then they were still like trying to say, the inflation is really good right now. It's showing that the economy is improving, stuff like this. The Fed noted that asset purchases would continue at least at the current pace until substantial further progress toward maximum employment. So they were talking about employment, price stability. I do not know what that means. Price stability. Looking at inflation right now, look at how price has been soaring so much. The left target range unchanged. Alright, still so far, and signal a strong likelihood. Alright, there may be no rate hikes through 2023. Such a statement has been repeated for the past few months. That they're going to keep rates low all the way until 2023, and all of a sudden, like even in the 28th of April, Fed unlikely to hint on tapering on the 28th of April, and in just less than a month. Right now, they are saying that it is time, it's about time that we begin discussing about tapering. So you can see that from this example, we can see that the Federal Reserve, the central banks, especially when they are very committed to certain things like keeping the rates low, you got to be really careful because it can change at any point of time. Their commitment, when they say they are really committed to this and that, it really doesn't mean anything at all. Alright, they can just change at any point of time. So do take note of that whenever you are reading news, especially information coming up from central banks. Take their words with a pinch of salt, right? Right, and if we look at inflation right now, yes, they really have a problem with inflation. And why do they have so much inflation? Because they're importing so much, right? Like if you look at the trade balance, trade deficit is at an all-time high, historical high, right? They're importing so much, exporting so little, that their prices just keep going up. Inflation just keep going up in the US. And of course, the helicopter money, the Federal Reserve printing so much amount of money, injecting into the economy, and so that's why. There's a lot more that we can talk about this, but in any case, let's come back to the charts. So since we are talking about the Federal Reserve, we'll come back to Bitcoin later. Let's talk about the what's happening in the stock markets. All right. So when the news came out, or rather just before FOMC, and just before the US session yesterday, we saw that Nasdaq actually fell again, and it actually fell from the from the range top right here all the way back to the bottom, and it found support. And after FOMC, nothing much changed. And after that, it just continues to climb. I'm not sure about the price right now. this is of course, we can always go take a look at it. Oh yes, I should type US 100. Alright, so yes, so there isn't much changes as of now. It's really quiet, but we can see that lows are getting higher. High is pretty much equal. To me, it really does seem that it will still go up. So you can see that this bullish bad pattern happened exactly the way I have put it yesterday. So if you have watched my video, you could have caught this trade. For myself, I did bought, but I already exited yesterday just before FOMC, just in case anything happens. So at the very least, I still get to take profit right here, while my stop loss is just right below here. Alright, so the risk reward ratio is still somewhat okay, maybe about 1.5 reward to 1 ratio, so that's still a good percentage. Talking about this technical setup, alright, like what I have drawn yesterday, expected the price to pull back. To pull back again, retest the low, and continues to go up. And why do I have this view is that if we look at the 4-hourly charts, all right, we are seeing a very strong support at the 252 moving average, and if you look at the daily charts, we are seeing a strong support at the 126 moving average. And every time it got supported, or every time it fell, it plunged and finds a low, there's always a chance for it to do a retest, and then it goes up. Right, so right here the same thing happens. So right now we are seeing the same thing is happening again. So at the very least, I do expect that the price will be able to go up. Let me just remove this, it's a little bit too messy. At the very least, I do expect the price to go up, right, back to this level. Okay, I think for the start, we'll look at this area. It is a supply zone we have to look out for, but I do expect it to go all the way to 13,700, because this is the neckline. Alright, this is really the neckline right here, which is why it's important supply zone. Alright, so that is for the Nasdaq. So if you still want to buy, I think we still have a pretty good price to do so. So that's something that you can look out for. And then we talk about the gold as well. So yesterday, just before the FOMC, and in fact just before the US session, gold actually went parabolic in a very small time frame. It pushed all the way back down just before FOMC, and right after FOMC, it just gets supported and slowly goes up. So gold is showing not much changes to whatever the FOMC have just announced. And if you look at the overall technical chart right here, or the trend, it's still going up, right? Lows are getting higher, highs are getting higher. Nothing has really changed as of this point of time. Even in the 1-hourly chart, we are still seeing higher lows and higher high. So if you ask me, I will still stick to my plan, which is I'm still going to buy, right? I'm still going to buy. I mean, because inflation is so high right now, the risk is so high right now, that even the FOMC, the Federal Reserve, has came out to say they may need to start, beginning to plan for a tapering. And I think that is a very strong enough hint, and that's a strong enough reason for us to think that the gold will still continue to climb. The gold is still considerably, I won't say really low, but it has came back from a very low price, a very long consolidation downwards since last year, August, all the way until March. So that's about more than half a year of a pullback, and right now it's coming back really strong. I mean, the bullish trend right now, there's just no signs of any reversal, and so therefore I still expect it to continue to climb all the way back into this supply zone right here. Alright, because this is really where things always turn. We did see that the gold did had such a similar kind of a bullish run back then, but every time it reaches 1,960, it came all the way down. It just crashed again every time it reaches this price. So I think there's no problem with gold reaching 1,950 or 60, but then will it actually be able to break out of it? Well, if inflation continues to rise at such a pace, and there's a shortage of supply everywhere, then this is what's going to happen. I mean, I think that the gold will, finally break out of this supply zone and just keep going up retest a high and even break a new high. So that's my my part for the gold. And maybe let's just go for one last one. Today I want to keep it shorter, which is the Bitcoin. Now Bitcoin, there's something really interesting. So, but anyway, what happened yesterday is that it came crashing down again. One of the biggest drop we have seen in a long time. I mean, based on percentage, right? But if we're talking about the pips, it should be one of the biggest in history. So right now it has already pulled back 50%. So I think I've been talking about Bitcoin pulling back. I mean, if Bitcoin were to really pull back, were to really start to crash, 50% is really nothing. All right, because back then in 2017, let's just move all the way back. All right, to right here, right, when it actually went parabolic. Okay, just like what we have for the past few months. It came crashing down, and the pullback is actually this much, 65%, right? The lowest was somewhere, it was about 70%. So that's why 50% pullback is really very normal. And I mean, if we were to look all the way even back to 2013, again, a very parabolic movement, and it peaked right here. And when it came down, guess what is the pullback? What's the percentage? 86%. So which is why when I see that, oh, it has really pulled at 30%, 40%, I think it's really normal. And I think if anyone want to buy at the point of time, I mean, just to be cautious, all right? And fair enough, it really did came even lower and finally reaches this level. But here's something that looks really similar, right? So this is the weekly time frame, and you can see that this is where after the price went parabolic, this is where it really found a support, right? So if you go back to 2018, early 2018, did you see that this is also a support? After it went all the way up, it found real support, and it came down, touched this price, and make a strong rebound. So the same thing is happening right now. Okay, but in any case, what we want to focus right now is the upside, because this has already happened. So you won't be able to get this price again. But as of current, if let's say you have already bought Bitcoin, or you're awaiting for a chance to buy Bitcoin again, you got to watch out for the top, the supply zone right here, right? So this was the neckline back then. So if we go back to the current market, this is the neckline right now, which means to say, if you want to buy Bitcoin, you got to start considering closing off your Bitcoin trade when it comes back to 45,000 at the most. Give it right here, 50,000 at the most, right? I think to be safe, 48,000. So between 45,000 to 48,000 is where you really need to go to get out of the market, because it may continue to come down again. Right, this is not going to go away that easily, especially after what has happened recently. Elon Musk or China, that's really dampening the mood of the Bitcoin. All right, so that's really all for today. And for today, maybe let's just quickly go through the calendar. What do we have today? Today is Thursday, so nothing much on our plate. We have consumer confidence, and we have durable goods order from US. So, well, I think there will still be some volatility, most likely in the US session. So I've already given you my thoughts on today's markets, on the gold and the Nasdaq. Hope you guys will be able to make some profit today as well. So see you again tomorrow.